The Hedgeless Horseman here. It's January the 3rd, and this is the second video of today. First of all, thanks to the sponsors. I also got a new sponsor, Stillwater Critical Minerals, which I think I've talked about a bit. Probably gonna do a article on them in the future. Well, they're an interesting company. A lot of nickel and PGMs in the US and has Glencore as a strategic investor. Let's move on. Markets, markets down. Metals were down quite a bit. As always, even though the companies, especially the junior companies, have no relation at all really to what the future prices are today, because they're not producing anything. They're still going to be affected by it. That's just the way of that's just how markets work, even though they're supposed to be forward-looking. We got some news. Pacific Ridge, which is a sponsor company, acquires 100% interest in RDP Copper Gold project. This is the project which they have a deal with Antofagasta Minerals, which is a major. Antofagasta can earn in 75% to the project. So they basically now have 100%, so they have the ability to give away 75% to a major company in case Antofagasta earns in fully for its 75%. So this is one of the many projects Pacific Ridge has. Again, I kind of like it especially as a asset hoarder. British Columbia is quite popular, very hot, a lot of M&A activity. They have 5 projects. I think their market cap is around 20 million Canadian. They have something already, a discovery at Clayule, RDP. They've hit at RDP, as you can see here, like 107 meters or 1.39 copper equivalent. That is obviously good, starting near surface. It equates to 2 grams per ton gold equivalent. Are these tier 1 projects or discoveries? No, I don't think it's tier 1, but it's appears to be pretty decent copper projects, and Clayule is quite de-risked. I don't know how much exactly they're gonna end up with there, and as always, just from a beta perspective, if it's not the most economic looking project in the world today at these copper prices, if a copper bull gets going, all of a sudden, everything will be pretty much very economic at face value. I simply think it's cheap relative to their portfolio. And I'm not saying they have a philo mining type project, but they have something. They have drilled quite a bit at Clayule, and now they have 100% of RDP, which Antofagasta can earn 75% of. And then they have the Red Ton, Chuchi, and Onyo projects as well. So again, it's like they're basically a copper project hoarder in a very good jurisdiction, and I would suggest good location as well, relatively speaking, at least for BC, for 20 million. So it's like I find it hard to call it not cheap, if you know what I mean. We also get news from District Metals. District to consolidate 100% of the Viken Energy Metals deposit in Sweden, which contains a historical inferred resource of 1.15 billion pounds of uranium. So this is amongst the largest deposit on total historic mineral resources of uranium and vanadium in the world. I think it's actually largest undeveloped alum shale, uranium, vanadium, potash, molybdenum, nickel, copper, zinc deposit in Sweden, and among the largest deposits. Yeah. So as we know, this is an absolute behemoth of a low-grade polymetallic deposit, billions of tons, basically as big as it gets almost. That's in its full-scale form. I mean, what I especially like about this, so they have kind of structured the deal, if I'm not mistaken. Yeah, okay. So they have within 30 days following the moratorium. So I mean, I like that because this deposit is kind of worthless, at least directly, if there's still a moratorium on uranium. Because, I mean, the uranium in this polymetallic deposit brings a lot to the table in terms of, I mean, revenues. So you're not, especially not going to be mining this if you can't extract the uranium. Or can't do anything, can't do anything with the uranium. Well, you wouldn't mine it because it's still going to be, I mean, I'm not a mining engineer, but I mean, if you mine the stuff and you can't recover the uranium, I mean, you still have to move it if you're supposed to recover the other stuff. So what do you do with the uranium? So I mean, for all intents and purposes, at face value, this is worthless unless you can legally mine the uranium. And I mean, this deal is partly based on that. I mean, them acquiring the other, 33% or something, because they own, I think, 76% already. So again, it's, I mean, it's a pretty good deal, meaning that they don't pay that much, if anything at all. Well, okay, a bit of cash. District shares. So, I mean, most of the stuff will be unlocked or will be paid if the moratorium is lifted. So I think this is a really smart deal by Garrett, and I think that also points to, I mean, how much of a good steward of capital I would say he is. Because you might as well have just paid whatever I was going to say, and then just, you know, bang on the big drum that you have 100% uranium, or there would be a, you know, massive payout or whatever. But in this case, it's like, yeah, okay, if the moratorium is lifted, then this behemoth of a deposit will be in play, and then, I mean, obviously, then you're more okay to, you know, pay for it, if you know what I mean. So I think this is a smart move, and I especially like that this will even more so prime the market for a lifting of the moratorium, because it looks a lot better if you have 100% of something that is large. Otherwise, I mean, you know, prospect generators, you know, earning or juniors which have a major earning in and then might keep 25%. I mean, they typically get very undervalued, or they get not a lot of love from the market. You can see that in Condor, for example, announcing the tech deal. The stock might have been up 1% on like 60,000 shares traded or something. That's just how it is, because it doesn't really trigger the greed factor. So it's especially in this environment, if you don't trigger the greed factor, I mean, you don't trigger anything at all. Or I should say, you need a lot of greed triggering for anyone to dare buying into this market, basically, in this sector right now. Regardless if it's cheap. I mean, a value investor would just, you know, love it. It's like, oh, I'm getting even more, or, you know, the risk is decreasing, whatever. But that's not how people function in the market, and therefore that's not how Mr. Market functions. So just the fact that they will have 100%, I mean, that's going to bring a lot of torque to a positive decision, and that's also when they, you know, pay most of the purchasing price. So I like this. I mean, again, Garrett is working day and night, obviously. I mean, this is what you really want, management teams like this. You have to have a CEO like Garrett, obviously a high achiever. I met Garrett, I really like Garrett. And he's been doing deals. He announced the deal with Boliden not too long ago, but at face value, you look at the stock, it's like, oh, I mean, I guess not much is happening, but he's like obviously working. He's not taking a vacation, waiting for better times. No, he's grinding. He's grinding. I mean that you kind of love to see, and sure, the market will not appreciate it until it does, or something happens, etc. So I really like that. I also thought I would talk a bit about the kind of drill place, because I think the latest 2 days in Hercules again. I think it's been volatile, obviously, but I think again it's like we want to pick up as much stuff as we. I mean, how does Mr. Market functions? And Mr. Market is just a marginal investor. The more we learn, like playing against, in poker, you want to know how your opponent functions, how he will react to stuff, how he will react later to stuff, etc., etc. And it's like we want to, in my opinion, try to front run what kind of news do we think will be out over the next, let's say, 6 to 12 months. How do we think the opponent, Mr. Market, will react to that? Can we take advantage of it? Can we take advantage of how he reacts in the short term and use that against him over the long term and stuff like that? So I mean, one thing that should be pretty obvious, or especially in light of Hercules, I would say, I mean, the more activity you see, and I'm talking like, chatter on Twitter, users in the forum that are active, etc. Hercules has been one of the most busy rooms, a lot of chatter, a lot of posts per day. That means there's a lot of people who have, I should just say, a lot of retail people are invested. And as we know, 95% of active investors, I mean, they underperform an index. I think it's even a higher number perhaps in this sector. And I'm talking long term because, again, a month doesn't say much or anything at all. I would say a year cannot mean much either. I mean, some of the best investors have down years. But over the long term, most make more bad decisions than good decisions. So what I would propose is that the more activity you see now, room, the more people, especially if it's a drill play, the more people are ready to probably sell at the next catalyst. Simply because, again, most people look for get-rich-quick schemes, meaning that they hold on for one catalyst and one catalyst alone. Basically, they want to be in something, and they're very excited about it, and hope that, I mean, because otherwise it doesn't make much sense, right? If you think about it, let's say you buy a farm, and you think, well, I mean, the crops I just sowed, meaning you bought in, I think they're gonna, pay off in 2-3 years. Would you spend every day kinda looking at the crops, talking about the crops? No, I don't think so. So it kind of signals that there's a lot of hot money, as it's called, short-term money, a lot of flippers, etc., etc. So and that kind of, I would suggest, means that there's gonna be a lot of people that are probably gonna sell almost regardless. That their intention is, they're very excited about it, the idea of selling at the next news release, expecting a pop, and not much else than that. They're not typically long-term focused, because in that case they wouldn't be posting in the forum every day, they wouldn't be following the stock, so they're typically overexposed, and they're typically planning to get rich on the next news release. And also I would say that what ties into that is, like, if you have, let's see, do I have, no, well, here I have Hercules. I would say, I mean, the thing with drill plays is that it's a double-edged sword if there's hype, if it's popular or not. Because like I said with, for example, Condor, it's like, given that it's an exciting drill target, I was prepared, and I've stated this, that if it reaches, I don't remember exactly what I said, but my initial idea was like, if that reaches like 80 million market cap pre-assays, I would be forced to take profits, because it's perhaps gone pricing in too much. The risk reward by default is worse the higher the price goes. So we had the first in this case, for example, was this a news day? No, I don't remember when the actual news was. Was that? I guess this was the actual news day, perhaps, when I made that the first hole into Hercules. I'm not 100% sure, but we didn't really get much news after that. But the stock revalued, so it was pricing in more and more of a blue sky scenario, and this came along with more hot money as well, because there was like 100 plus people in the room on a given day. So then when we have, let's say, a hype, or expectations hype, buyers coming in for the next news release that are more inclined to sell regardless of what the actual news is. I mean, if it's good, they hope to sell at if it pops, they hope to make a quick profit. If it's bad, they're gonna panic sell, because again they were just holding out for the next news release, and so it's a double-edged sword. It's like, do we want to see? I mean, I would say the Condor room, for example, is relatively calm, I would say. Let's see here. I mean, yeah, there is some shatter, but it's like relatively calm. It's like 7 people online, 1 active. I mean, not too much. I mean, that is actually what you want to see. So it's like, I have a lot of exposure to Condor, and you know what I do? I think I posted mostly in the Condor room lately. But like, I have no problem really with, we want low expectations. If we have decided we're gonna take whatever as a risk, we want low expectations. We don't want hot money that's gonna weigh on the stock. We don't want too many people who have bought before the news, because they're gonna be, I'm not gonna say forced sellers, but that's gonna be backed up selling pressure, because there's a lot of people, and there might be more. Who knows how much there is in Condor? They're just like, they hope that the news is good, and then they're immediately gonna flip and sell. I mean, that's up to each and everyone to do what they think is right, of course. But like, that is really, if we're holding into assay results, typically we want quiet forums, we want low to little shatter. We don't want too many eyes on it, because in that case it means probably there's not too much hot money, short-term money, meaning that even if the results aren't that great, but there's still like potential, or the company itself has a lot of long-term potential, you typically won't see a huge dip like in Hercules, for example, because people are long-term orientated. They didn't buy or sell based on one news release. I mean, this is assuming the news release isn't that the whole company is basically done for, but you know what I mean. I mean, they don't have an automatic sell order after the next news release, basically. So if it's a news release that's like, let's say it is decent, and the market opens up neutral or whatever. If it's decent and there's a lot of hot money that we're gonna sell anyway, even though the case might be intact and really not too much should happen with the price, you have a lot of pent up selling, and they're gonna be selling anyway, even though it might be cheap before the news, it might be cheaper after the news when they sell, but that doesn't matter, because that was their default setting. They were gonna sell regardless of what the news were. If it goes up, they're gonna weigh on the stock. They're gonna sell into the rise. So there's gonna be a lot of supply of shares if it's good news and it pops, which could overwhelm it. And we've seen that in like Western Alaska, for example, a lot of people, it was very primed going into assays because everybody knew the visuals were good. So it popped, and then all the people that had the intention of, well, I think I'm going to make money on the good hole, and it was a good hole, but there was so many shares that had been bought just for in order to sell on the news release day. So it kind of overwhelmed it. Because, and with that said, if the hole was even better, maybe things would have changed in that case. But it was a really, I mean, it's, what was it, like 100 meters of 500 gram per ton or something, silver equivalent. So a great hole, but if it would have been like 100 meter of 1000 gram per ton AG equivalent, maybe, there would even be more buying coming in to take the shares out of all the pent up selling. That's one possibility. So, I mean, if we have a hype into a real play, one has the option or opportunity, price going up. It's like that's what I mean with volatility, etc. It's like, it's not the volatility in itself, it's the decisions we make in the face of volatility. Because let's say, I was going to say, news release is put out here. Nothing really changed. It's just the market started pricing in or get excited, yada, yada, yada. So there's been no news from here up to here. For all we know, the value didn't change from this time period to this time period, but price changed. So whatever, how much you like the stock here, whatever your exposure was here, you should by default have less exposure here. If nothing really changed with the company. I mean, yes, it's in a theoretical scenario, let's say gold hits $4,000 in the meantime, and this all of a sudden is cheap. But let's say, assuming it's like not too much has happened, that because this is price going up, and who knows what the value is. Maybe the value was here, so here you have a price to value gap that is from here to here, and as it goes up, the price to value gap shrinks obviously, and maybe up here it's actually the price is higher than the implied risk adjusted value, so then it's a sell by default, not just relatively speaking. But that is how we should think. And again, if there is hype, we know the more people are looking at a stock, etc., you can just assume that's hot money, because most retail investing is hot money, and that's why 95% plus actually doesn't make any money in the long term, because they're always or typically letting price dictate, and they follow the obvious whatever. But then you have an opportunity to sell in that case, because you got them profits without taking any assay risk yet. But if you want to take assay risk, you prefer to have low to no hype, and no pent up selling pressure that's just going to flood the market when the next news release comes. That there's 100 shareholders that whatever the news is, they plan on selling. If you don't have that, you don't have much resistance to the upside, and there's not too many shares that will sell again, regardless if it's an okay news release. They won't just slam the price because they're out. They're looking for the next hot pick where they can make money, get rich overnight from a single catalyst. So they're out. They're gonna go looking for the next catalyst. So yeah, holding in assays, you actually prefer low key, subdued, and typically that goes with not a ramping price, which is great, because again, that's what I meant about Condor, is like if Condor would ramp, I'm not going to say too high, but if materially higher, let's say it was pricing in, I don't know, just let's say $80 million in market cap or whatever, it's like that might be an okay threshold to like, yeah, I'm going to take a third of my position off the table because I have gotten nice returns pre-assay risk. So without any actual risk taking, I got a nice reward from other people buying it up. But if you don't have a huge run, that means that, downside is lower and upside is higher going into the actual news, and there's less pent-up selling demand. Again, nobody knows exactly how much, or what the mentality is of every shareholder or anything like that. But it should make sense that it's quite natural and makes a lot of sense to be taking profits into a ramping stock price if no news is out, because that just means price is going up. It's not the project getting better. It's just people are paying more and more for the project, and more of the blue sky is priced in. And I'm not talking a huge amount. I mean, take Hercules for example. I think it went up to like 330 million or something. I mean, that's not pricing in world class deposit, but still it might be pricing in 10% of it, something like that. And before it ran up, it might have priced in 5. So that's a better odds. If the market is pricing in a 5% chance of success, and you think it's 10 or something, and it goes up to 10, I mean, all of a sudden it's fair value, and might or should perhaps sell quite a bit. So it's like, let's think about Hercules here for a while. So we know we're going in with a lot of hot money. It's like almost the number one talked about stock. I think it had. I think during a week or something, or a day, someone just mentioned that it had created more volume than all of TSXV, the rest of TSXV combined. I'm not sure that's true or not, but it would speak volumes about how many people are looking at this, hoping to get rich quickly. So a lot of pent up selling demand. Okay, what happens? There are a lot of people who are gonna sell on news release day regardless, because most of the people don't read news releases anyway. Excuse me, just had to drink a sip of water. So then we got news release day, and the results weren't barn burners. The holes were lower grade than the first hole. Okay. So like I said before, you have a lot of people that were going to sell regardless. They hoped that it would go like this so they can sell up here. But they thought, well, they also take a lot of cue from the market reaction, yada yada yada. So they're thinking, okay, the ship has sunk, because that's what the initial market price reaction is. So they're going to be panic selling. Not going to ask questions. They're not going to think about what does the news release mean for the next 10 news releases, what's going to happen afterwards, is this cheap relative to all the context we know, everything that's in the news release, everything that might come out of this project over the next 12 months. That is an afterthought. This is going on impulse, greed and fear. Greed turned to fear. So sell, sell, sell. In my opinion, no reaction, but it's just my opinion. Then you have the dip buyers, and I mean, I'm guilty of that as well. That's like, when I see volatility, something crashes, and it's like you can typically it is an overreaction regardless what the news is. Especially in a poor sentiment environment, it's a skew to the downside, and a lot of hot money means there's going to be a lot more people waiting to sell than waiting to buy. So you have dip buyers, and it rallies for, how much did it rally? 30% from the bottom. That's not bad at all within a day or so. So you're gonna have obviously people who are know how this works, that there's gonna be dip buyers, like a self-fulfilling prophecy. So they buy up, and then they might be selling after they've done. I mean, that's typically, you're gonna see the forums people brag about, oh, I picked up share. Well, they say they picked up shares here. Say they picked up shares, talk about how bullish they are on the stock and everything that good that's going to happen, and then a few hours later they say that they sold, and it's like good luck to the rest of you. That's just how it works, because everybody talks their book basically. And then you have the people who might have missed the news release yesterday or something like that, or they haven't really processed it or gotten around to it. Come back and see, okay, Hercules is down 40%. They look into the forums. There's a lot of bashers. There's a lot of not only necessarily bashers, but a lot of worrying, a lot of yada yada. So they're worried. They're like, okay, the ship appears to be sinking. So I better sell. It's a dead cat bounce or whatever. So they start selling, and then in this case, more dip buyers came in again, and it jumped a bit. It's like, what's gonna happen from here on out? I don't know, but it's like, I think it's a good idea to, again, like in poker or whatever, and people overall, actually, if you understand where people are coming from. I mean, it's like bitter people on Twitter or whatever, or people who indulge in Schadenfreude or whatever. It's like, let's put it like there. Let's put it like this: they're not negative because everything is going well, if you know what I mean. Everybody, I like the expression, nobody says or do anything that isn't a direct reflection of how they feel in the moment. So you're typically gonna have the people that have the worst results, or maybe just going through a shitty period in life or whatever. They're typically gonna be the most hateful, indulge in Schadenfreude, etc., etc. Because I don't see many of the, let's say, uh, most successful people. They don't have time to troll or, throw shit at people. They're busy winning. They're busy focusing on keep winning. Their portfolio has nothing to do with any other one's portfolio, if you know what I mean. But in this, like, there's a lot of ego, there's money involved and all that. And if you can point to someone being dumb, that, by extension, you're supposed to look smart. I mean, you're kind of, trying to tear other people down to look smart yourself, etc. I mean, you see that all the time in this sector. In the forums and on Twitter, people pointing out other people's quote mistakes and all that. So that's something you have to get used to. And one thing I think is really important, not to lose your confidence. Because every time a stock goes down, the time a stock goes down, you look stupid, for example. There's not going to be a shortage of people trying to claim that you are stupid for, let's say, holding a stock or being bullish a stock that goes down. The trick is not to let that affect you, because I think confidence and conviction are, two basically pillars of investing, because you have to trust yourself. I mean, if you're supposed to be a contrarian, let's say, I mean, if you see a setup, you have to trust that, especially in an asymmetrical sector like this, especially at a sentiment low like this in the sector overall. You have to, if you're bullish, you have to stick with that conviction. It makes absolute sense, but you probably have been looking stupid for quite some time. You just have to, ignore that. The market is not right just because you're not dumb, just because you have paper losses or whatever. Because in this case, for example, nobody knew what the results were going to be. Absolutely no one. Nobody on earth. Nobody. Not a single person except the guys at the Assay Labs, I guess, knew what the actual results were going to be. We saw what came to pass. This would be totally different if they hit 200 meters of 1% copper equivalent and stuff like that, which was a possibility that they would hit. Anything could happen. We saw what happened. We're not fortune tellers. In that case, I mean, that's what's also a thing that people should keep in mind, that it's much easier to sound and look smart than actually make money. Because there's a lot of people that would say it's like, again, in hindsight, told you so, etc., etc. Like they knew, like anybody knew what was going to happen. They didn't. I mean, if they did, they would be shorting the shit out of it. They would have a huge short position in it. There's not enough share. There weren't too big short positions, etc. So there's a lot of talk from a lot of people, and that's typically how it is. So everyone on the forum basically, and Twitter basically, tries to sound smart, and I mean, I'm guilty of that as well, I gotta assume. But there's a big difference between appearing smart and actually making money. Because to some, if you listen to how some people write, it's like they always know, they always knew it was gonna be bad or whatever. Then obviously the logical question is, okay, then you should be rich if you always have the answers, because you would be, every time you knew it was going to be bad or whatever, would have been shorting it, and every time you know a company, because you know everything again, what the future is going to be. So you should be incredibly rich. Yet most people are not incredibly rich. Less than 5% actually make any money. So I mean, that just goes to show people sound a lot smarter than they actually are, because if they were as smart as they said, if they knew as much as they claim, they would make every right move, basically. So that's just something to think about. That's like, if you see someone that's like indulging in Schadenfreude in the forum or whatever, just basically rubbing salt in people's wounds, etc. It's like, that's not coming from a winner. That's someone who is hurting for some reason, and wants to make himself feel better by kind of putting others down. That's just how it is. So I would much rather not be that person. I mean, it's like, I think everybody would much rather to have a, let's say, calm, balanced, and happy life than it's like, make money in the stock market at all costs, if you know what I mean. But it's like, I think it's a good lesson, because I think we can kind of understand what has happened, how people think, what kind of retail investor or investor overall came in, based on what happened here. Okay, a lot of pent up selling demand, because there was 100 people in the chat, in the forum. So it would probably take something really, really good, let's say, to have a really big jump here. And of course, I was very much open to the possibility they would hit really good holes in the next 3 after the first good one. And then you also, obviously, you knew, and I said that before the market opened, that's like, you're gonna see a lot of bashing, a lot of Schadenfreude. There's gonna be a spiral of negativity and all of that. That just comes with the territory, and nobody wants to look stupid, and everybody's gonna be told that they're stupid if they held it, yada yada. So it's like, now it's, I mean, starting to settle in, kinda, that maybe most of the hot money is out, because we've churned, I think someone said we churned through like 10% of the float or something. So we don't know. I mean, Willem from Discovery Commodity Fund, or Commodity Discovery Fund, he claimed that they had bought 300,000 shares in this dip. So if that's true, I mean, that's a fund that's been adding in this washout. And it's like, you could ask Willem yourself, or someone claims like, oh, you shouldn't, go on what Willem says, because he has had a lot of stores that hasn't gone well or whatever. It's like, welcome to the junior sector. That's absolutely meaningless information. That just tells you that, I mean, and I know who it is, that he doesn't even understand this sector, because it's like, if the idea is that you should only pay attention to people with close to 100% hit rate, then you will not pay attention to anyone, because nobody has close to 100% hit rate. Especially not if you're talking like, I mean, I might be bullish. I might, have a few stocks where it's like, I think, I'm 70% sure or 80% sure I'm going to make money on those stocks, those two, but I'm not going to only have those two stocks, if you know what I mean. Especially me, since I'm, always fully invested. So I'm gonna have a lot of losers, easily over 50%. That's not gonna turn into some, world class or tier 2, tier 3, or tier 2, tier 1 discovery or anything. That just comes with the territory. The idea is that you have a few winners, and they're supposed to pay for a lot of losers. But you can also, we don't know what's gonna happen with Hercules, for example. Because we got a new piece of information. I think it made total sense to buy on the first hole, and that proved out to be, I mean, profitable, but that was no guarantee. It just happened. Then you had the opportunity to take some profits, because it kept running without any actual new news. So if you thought it was a no-brainer buy here or whatever. Maybe it wasn't a no-brainer buy up here, or you should have reduced your position at least. And now we have finally new information, well, except for Barrick's participation also. So now we have a new data point to include. Okay, what do we think about the long-term prospects? And again, I have no idea if I'm gonna, end up making money on Hercules from this level. I just added some during the dip, because the way I see it, I think there's still a shot at finding something. Maybe that shot has decreased, but so did the market cap by quite a bit. So it's like I need less certainty of this being a success down here than up here. So even if the story took a hit, maybe price went down more than, the odds of them making a significant discovery. Because the way I see it, at least, and I've said this before, it's like they have 25 million in the bank. They have a market cap, I don't know, 170 million. Is that like super cheap? No. But if they do end up finding something world class after they drill, I don't know how many holes they can drill with 25 millions, but probably quite a few, and they're probably going to be testing different targets and all that. If they spend 25 millions and doesn't come up with anything close to economic, we're obviously going to lose money, even if we buy it at 40% discount from here, for example, obviously. But if they do end up making a significant discovery, we might make more from this than we would have up here, assuming the news wasn't that bad that Blue Sky got cut in half as well. And I'm not sure that's the case. But the point is that, like, I don't know if I'm going to make money on Hercules. If they do end up making a significant, or they prove this is a significant discovery after the 25 million is spent. So it's like if we could time travel to 2026, or whatever, 2026, they spent 25 million. If things go well, they're probably going to drill even more, yada, yada, yada. But it's a quite easy story from that perspective. There are absolutely no guarantees, but if they do end up finding something that's Barrick worthy after spending 25 million, we're gonna make probably quite a bit of money from these levels, and that would pay for a lot of similar stories that did not play out well, where they didn't make a significant discovery. If they don't find a significant discovery after spending 25 million, we're going to have probably a 50% loss or more from these levels. But that's the asymmetrical beauty of it. If the Blue Sky, I don't know what a world-class copper discovery would be, or a tier 2 or tier 1 copper discovery would be, but let's say, 1, 2, 3 billion. I mean, we kind of have an idea what the upside could be from 170 million or 200 million, whatever it is fully diluted. There's obviously upside ahead, and I don't think this story is close to that. I think it's too early. I just know that if it ends up working out, any buys down here will pay off more than buys up here, assuming they, reach Blue Sky. Then I thought I would talk a bit about some other, quite interesting, again, high risk, high reward stories, well, relatively speaking, but that have more the kind of, disseminated gold systems where it's like with one drill campaign they can prove up quite a bit, similar to Snowline, similar to Condor, similar theoretical to Hercules, because let's face it, I don't know what the next holes are going to be. Maybe they're going to be shit as well. Well, I'm not going to say shit, but maybe they will be mediocre as well. I don't know. I just know that if one of the coming holes is a good or a great hole, I think the sentiment will shift like that. Because all of a sudden, people will start to talk about, hey, this could be, a the Blue Sky dream is very much alive. If their next holes are also mediocre, I think we're going to be down even more. But then again, if they have 25 million to spend, it depends on what the actual news is going to be. I think we're going to, I'm waiting to learn a lot more from the, company itself. But, so we don't know how this is going to go. I mean, they might release an IP survey one of these days. And I mean, it's like Willem, he thinks that it will jump 50% on the IP server results alone. Is that possible? Sure, it's possible. Maybe, let's say they do put out the IP survey, gets people excited. And they kind of show that, hey, here is where we think the main targets are, including perhaps the new staked ground. And then they put out some holes from the 23, more holes from the 2023 blind campaign, and maybe they are mediocre to bad, and we take a hit again. But then at least, like, okay, maybe that's going to be lessened by the fact that, okay, the IP anomalies, the IP survey and the company in discussions with Barrick, they kind of confirmed that, yeah, we were not drilling the right direction from hole 5 or whatever. We have not tested any of the most shining targets, let's say. Then maybe the reaction will not be that much, because people know that, okay, well, we don't expect too much from the coming holes. I mean, there's a bunch of ways this can go still. I just think, I don't think it's as bad right now that as some say, that it's basically, over. That's my view on it, at least. And what the future will hold, nobody knows. This is just one of many bets. But that's at least my bet rationale. But anyway, so some other stores that I think are quite interesting. Altamira, and I've talked about this one. They also have, since they're drilling a grid pattern over a soil anomaly, that's, what is it? Oops. They're drilling 27 diamond holes, totaling 5,000 meters. Gold in soil anomaly measuring 800 by 800 meters, and is coincident with a magnetic low anomaly with dimensions of 1.5 kilometers times 800 meters. Do they have? They don't show the soil anomaly here, I think. No, okay. But this is the expected, and I recently showed this is the expected grid drilling. This is the I think that's the mag low, or is it gravity low? I don't remember. But here, so it's like they've already hit something. I mean, that's a lot of de-risking right there. Drilling a few shallow holes, and they're hitting 1 grams per ton from surface. What are the odds that these are the only 1 grammer holes from surface over this area? I think that's relatively low. So I think this has fairly high success chance, actually. And I think if they have pretty good success here, I think this could infer quite a bit of gold in just this coming drill campaign. So that's very steep growth curve potentially. That's stuff I kind of like. Obviously the short, I guess, looks quite primed. And Aura Minerals got in, so it's like, they I think they got in for Maria Bonita, so they think they probably have something. I don't know how much to read into the accumulation distribution, but it appears there's been quite accumulation. Then there's, of course, Tectonic, which is also a reduced intrusion gold play, and they didn't get as much drilling as they hoped done, unfortunately. But still, there is some shatter, so there are eyes here. There's like 10 people in the room, so there's some expectations. There will be some who are probably gonna sell regardless of what comes. So it's not 100 people. It's not like Hercules, and it's starting at 36 million, not 360 million. So I think these guys have a shot. If they would surprise if they show they're onto something, and they are onto something in 2 years, if there is a big gold deposit there, and they get, let's say, 2 additional seasons to drill, this probably will look very cheap. And again, that is supposed to pay for a lot of failures. for example. Maybe Hercules fails, but Tectonic pays for Hercules and whatever, Altamira and Condor and yeah, you get the point. But that again assumes one is able to not just be a flipper but actually holds through the majority of the growth phase, for example. And I think, yeah, the Tectonic chart, I mean, I would say it kind of looks a bit like Altamira. It's like not too much expectations going into this, which is good. I mean, Altamira is like, I would think we're going to get results sooner or later. I don't know if they're going to batch everything in one. Usually it's like Condor, but I mean, this chart doesn't scream high expectations, and that's good if you're holding into ASA results. Same, I would say, goes for Tectonic. I mean, it's up from ridiculously cheap levels here, but it's not, again, screaming. It's more that it's been capped by, traders, etc., and there's not enough buying power in the sector right now to, not let the traders have their way. So I wouldn't say this is screaming extreme expectations either, which is good. Then there's Sitka Gold, which Quinton recently talked about. I have taken a position a few weeks back in the family portfolios. Unfortunately, I don't have any dry powder personally to get into Sitka, and I can't buy it through my company because it's on the smaller Canadian exchange. But this looks interesting as well, and I think it's let's see, it has 49 million market cap. Most of these are like 50 or sub 50, which is, I mean, great. If they do end up making a significant discovery and we go into a hotter market, I mean, 500 million market cap for a true discovery, that's probably gonna be relatively easy to do. Now, it might be a year before we are at high sentiment levels again, but in a year they probably will be able to have done much more drilling. So this is also one of those like bulk type. Let's see here. 1.2 over 84, 84 meters of 4.21. So it's a bulk target, 290 meters. Oh, excuse me, of 1.34, including 124 meters of 2 grams per ton. That's more, valley type stuff. So I mean, if they slam a few big holes in this one, and it's starting to show that this is a multi-million ounce gold system and not the typical 0.5 grams per ton bulk system, this could look quite cheap in a year or two, and again pay for many others that, I mean, like, might pay for Tectonic and Altamira that didn't hit, or Tectonic hits and pays for Altamira and etc., etc. And the downside is, I mean, this is 49. I mean, they have a big portfolio, so there's some value there, even if this RC project doesn't turn out exactly like they hope. And in the case of Altamira, for example, 33 million, they get, I think, 6 million in cash or something. But we assume that's going to be spent. They still have 700,000 ounces of gold in the ground already. They have 3 porphyry targets as well as a few other gold targets. So there's more kicks at the can, even though most of it will go to Maria Bonita and maybe some porphyry drilling as well, actually. But so you have, in some of these stories, you have actually more than one shot. It's like Condor with Cobra Orco. There's another shot, so it's like that you prefer. I mean, in Hercules' case, it's a copper shot, but it's a huge target. Potentially a district. So they will have a few targets within that, which is good, because you want diversification to the upside, because obviously if you have 3 targets and 3 targets, any of those could be a company maker. That means it's like you're holding 3 juniors with good looking projects in one. That's just great, in my opinion, from a risk perspective. It's like playing 3 hands. You can win on any one of them. Then there's Lavras Gold, which I thought I had Lavras here. Apparently I didn't. Lavras Gold, which was very hot not too long ago because they put out some very also bulk results, like 204 meters to 1 gram per ton, drill hole depth of 31 meters, 340 meters to 1 gram per ton. I mean, not they might have, there might be included some higher grade stuff and all that, but also these kind of bulk type intercepts where it's like, as with Snowland, let's say you put in 20-30 holes, and if you're lucky, I mean, you could kind of infer 6 million plus. I mean, you can't do that with a load gold system. So these are the type of targets that if they are successful and robust, they could have a growth curve that's like, I mean, almost from scratch to blue sky in just a year, for example. But you can see how anticipation, excitement has gone down, and they haven't really put out any more news either. So I would say this is, people getting impatient, getting bored, whatever. It's like a positive sign is like, not long ago at all. I mean, the insiders, a few insiders actually, a couple insiders at least. Wait, Raiko, Uloth, Duros. So you got 3 insiders that are buying in the open market when this is getting cheaper. I mean, that's a pretty good sign. I mean, obviously they think it shouldn't go lower, but it might be going lower simply because people are getting impatient and they're looking for another. Maybe people left this, want to get into Hercules, for example. Again, catalyst flipping. But the good thing is that the longer this takes, I think people are going to get more and more paranoid. Sometimes there's a saying that, bad news arrives slowly and good news arrives quickly. So maybe that's what's feeding into people's expectations. But maybe the assay labs are just slow. And again, you see insiders, buying quite a bit. So it's like to see insiders buying when price is going down on no news. I mean, that's probably not the worst thing to see. I haven't dug into it fully, but again, 47 million market cap. It's like same thing. Do they have a chance of having a multi-million ounce discovery? Sure. I mean, in a hot market, even if it's lower grade, 47 million could look pretty cheap in that case. Then we have metallic minerals, which is kind of interesting. They quite recently completes exploration program at the La Plata Gold project. So this is one that's going to be interesting what they come out with, and I think it's also been, you can see it's like, it's taken, they've drilled for like, I don't know, couple of months, no results yet. People get impatient. They're forgetting that they're even drilling and forgetting that there are results, probably getting paranoid because results are taking a long time, and remembering that, well, first of all, and the thing is, let's take Hercules for example. If you have a lot of people in a store like that, they get burned on assays. How do you think they're going to be thinking about assay plays in general? I see people that tweeted the flush in Hercules, and with the caption that this is why I don't invest in exploration plays. So obviously that's going to feed into us. It's like, it's a human reaction. Okay, you get burned on assay results. Does that make you want to take more assay risk? Or does that make you think that, oh shit, I don't know what I'm doing, it's like these are so risky, I should get out of every drill play, etc. I think there's, given how many people, for a time being at least, got 40% paper losses in Hercules Silver. I think, if they own other exploration plays, which they probably do, I think that's going to be a negative jolt, negative shock, and they might get more and more paranoid with other plays as well. Because this is kind of, I'm not going to say this is exactly what you want to see. Assuming there's no leaks, then this is lower expectations, because the thing is, like with Lavras, okay, assuming there were leaks, would management, insiders be buying like this? I don't think so. So this is actually good signs, like 4 people in the room. Here you have 5 people in the rooms. Like, not too many people are watching these stories. They've all gotten boring because they haven't put out news, so people forget that they're even drilling possibly. That's great. Going into results, that's great. That's the kind of the opposite of Hercules. And with that said, it's like there's nobody that can say that it was bad to hold into Hercules asset, because if the assets might as well have been good, we have no idea about that. And also just like to point out how this sector works, etc. It's again, there's a lot of people, told you so kind of stuff. There's I have a internet friend, Aaron G. You've probably seen him on Twitter, etc. He's a funny guy. I like him, but he's a bit funny in the sense that he kind of doesn't know how little he know, in a sense. Quite short-term oriented investor. I think he only owns 2 gold stocks right now, but he has very, very strong opinions about stocks. And it's like, when it was very, very favorable to be shitting on Eloro after the resource update, and it sold off. So sentiment went. I mean, just imagine how many people got, were just waiting for a new maiden resource to save the day. Because, I mean, even though this looks relatively bad, Eloro was outperforming the sector, but it doesn't feel like that. This feels like you're being dragged over concrete. And a lot of people probably were hoping that the maiden resource was going to be a catalyst, that's like a liquidity event, but to the upside, obviously. So that came in under expectations. Boom, slam. Panic selling, people who were going to sell anyway, just waiting to sell on that. So you had the same kind of phenomena. I think a lot of pent-up selling demand. And sentiment just got worse and worse. And all of Twitter was shitting on Eloro. And again, just using the maiden resource as like the end-all be-all for Iska, whereas I thought it was wrong. But anyway, so when it was down, almost at the low, it's like Aaron joining the choir. I guess he, reading a lot of Twitter. I don't know why he had such a beef with Eloro, but it's like put out a sell call at 145. He's already down 50%. So that's just in my opinion. I didn't know it was gonna jump, but the lesson there, I would say, is that this was kind of a liquidity flush out, sentiment depression, and as per the Quinton's presentations and all of that, and it's like he explained it very well, that this resource is probably not a fair estimate of how Iska is going to be. It's probably underrepresenting the grade and size of Iska potentially by quite a bit. And then we got a new, first news release which had 60 meters of like 300-400 gram per ton AG equivalent within the theorized pit shell. So it's like, okay, if you have that kind of money rock there, it's like, what else is there? So it's already some early proof of concept that Iska's first resource was probably understating it by quite a bit. Again, like what I would say it could be the case for Hercules, that people look at just the results and they think that's it. Like Hercules, a lot of people probably have written off the whole district from 3 holes, which in my opinion makes little sense. But we're supposed to think, what price are we paying now? What could happen in the future? So, I mean, it didn't take long for Eloro to show that, the resource is probably understating Iska. And all of a sudden, it jumped. It got flushed out. Sentiment got retarded. Expectations got retarded. And it's like, it's not as bad as it looks, because it is not the end-all be-all. It's gonna get better. But it was priced like that was it was, I'm not going to say dead, because it still had a, over, I think, 100 million market cap valuation, but you get the idea. That's the thing. It's like when it's kind of obvious. It's like you're jumping on the bandwagon without. I mean, you're just regurgitating, following what everybody else kind of on Twitter, and I would think, most of the people that shits on Twitter and all of those. I mean, I don't think they're that great of an investor, if you know what I mean. There's a lot of people that have a lot of strong opinions on stocks they don't own, don't know too well, but they have strong opinions, and there's typically a clique of people that's like, they it looks like they get together and then they shit on the stocks of let's say it's a Crescat play because they hate Crescat, so they want this to be a failure and they want it to go down, so they look smart calling it a failure, etc., etc. So Aaron G showed up today in Hercules as well. So I'm not saying I'm not going to use him as a bottom caller, but it's like he tends to be quite late to the party. And it's very human, because the sentiment, I mean, all hope was lost. That's how it felt down here. But that's the thing, when hope feels lost, I mean, most people have sold. Most people that believe just look at the headline, whatever, just look at the resource, like, oh, okay, I guess this is it. This is how Iska looks. But it's like, no, that's probably not the final form of Iska, and they're starting to prove that. And I think the same goes for Hercules. I think that I don't know how you can make that claim that 3 holes could kill a district. I mean, that's, in my opinion, absolutely ridiculous. And they have $25 million to drill for, to prove that might have been too hasty of a conclusion. And that's no guarantee that dip buying here is gonna look smart, because that's not the idea. Nobody can know. So if you bought this dip, for example, and within, let's say, 1-2 years, it's obvious that there's absolutely nothing economic in terms of copper porphyry, and it's down to, I mean, they have the silver, but let's say it's down to, heck, what do I know, 47 cents. Like, oh, then it was a bad buy. I mean, that's not how investing works. We make bets on an unknowable future. Claiming stuff in hindsight, that's not investing. How on earth will that... What did you learn from that? Because there's going to be other cases where it's kind of similar. Like, I mean, let's say you think that Hercules and Allure are kind of, in the same spot. There's like people to put too much weight on how it looks exactly now at face value. And let's say one of these stocks end up getting a lot better. So what did you learn? I mean, if the case was kind of the same, one simply worked out because for some reason Mother Nature blessed that area with endowment, and the other area it was not blessed with endowment, mineral endowment. I mean, that's the thing. It's like everything is theoretical. We make bets without knowing the future. It's like, I think, for example, a lot of these bets I've talked about, I think all are probably good bets. That doesn't mean every single bet will pay off. Going all in with aces is a good bet. But not even aces will win every time. You can be all in with aces 5 times in a row. That doesn't mean those were bad bets. They were just favorable bets that did not work out. But in the long term, you will win like 82% of times when you have aces. But that's the thing. That's why you should only look at results over, like, I mean, you can only judge your results after like 5-10 years or something. Because you have no idea what was, unlucky, lucky, or whatever. But when you made enough decisions, when you made hundreds of decisions, for example, and after 5-10 years, Then you have an idea if your decision making was good or bad. But just buying 2 stocks and you're up and you think you're great, or you bought 2 stocks and they're down and you think you're piss, that's nothing. Again, you can be all in with aces 2 times in a row, where it's like you literally know you're a favorite. You don't know what the odds are in investing, in exploration. You have no idea. You can only kind of assume, and the best weapon we have is price. The less we pay, the less is priced in. So if we think, oh, there's only a 20% chance this is going to work out, but it's pricing in, let's say, a 10% chance. Even if it turns out to be 12% chance, not that anyone can know that, but theoretically, if you bought it when it was pricing in a 10% chance, you actually made a good bet, even though there was a 88% chance of failure. So you're going to look stupid 88 times out of 100, and still, it was a good bet. So you can't take this stuff personally. Do you have a good reason for why you think, and again, what is the exit strategy? Why did you buy? It's like, did I pick up some shares of Hercules here because I think I'm gonna be in the green in a week or a month or whatever? No. I think that, again, go through the possible scenarios here. You could go the route, I mean, theoretically, just, okay, I'm going to hold this until they've spent $25 million of drilling. Either I'm going to be up, maybe a lot, or I'm going to be down at least 50% from here. That's a pretty, I mean, simple bet. Whereas most people, like, I'm going to get every single short-term correction or direction correct. It's like, good luck with that. It's, I would say that's as easy almost as it gets. Like, oh, I'm buying now because in 2 years this might, this might look cheap. Will it? I don't know. But that's, I would say, then you're playing the asymmetrical risk reward at least. It's the same thing with if you have a good management team. How do you capture the alpha of a good management team? That's obviously giving them time. Because I made this analog before. If you have Michael Jordan in a game, you have a basketball team, you put in Michael Jordan. If you give him 1 second to play, he's not going to be creating a lot of value, a lot of points. Give him 1 quarter to play, he's going to probably generate some value for you. Give him 2 quarters, he's going to influence it even more. Give him the whole game, you're probably going to win the game. That's the thing with a good management team. How do you play a good management team? That's time held. The odds that a good management team will have created value from day one, if you give them 2 years, is much higher than if you give them 1 day to create value. So that's what's like, kind of fun. It's like time is the friend of the good management team. Time is the friend of a big blue sky project with a long runway for growth, etc. Because let's face it, even if Hercules Silver is onto a world-class discovery, how much will they have been able to prove that? Even if it's true, even if you knew they have a world-class, we could, have an X-ray. We know exactly how much copper is there. You buy it when it's pricing in 5%, 10% of blue sky. And you know it's going to take 3 years to prove out blue sky, let's say. Obviously, the highest delta is from today and hold it for 3 years, because that's when the most value creation will have occurred. If you hold it for 3 months in between, yeah, you'll capture some growth. But again, the longer you give them, assuming it's just going to grow and grow. I mean, the longer time you give them, the more value will be created, and the more the future value to the current price, the difference, the delta there is just going to grow and grow. Because if this is price today, this is their theoretical growth curve, this is your returns. If you buy it today, I mean, obviously the longer you give it, the higher the today's price to future value gap will be, and your expected profits will just grow with the time held. And if you buy it here and price is there and you hold it for, I don't know, 6 months, this is, your inferred future profits, let's say. But if you hold it longer, that's just also going to grow. That's the thing. That's how you capture the reward side, obviously. So what kind of chance of success will you have to give Hercules Silver of finding a tier 1 discovery from today's market cap 190? I don't know. What's a tier 1 discovery worth? I don't know. I mean, if they find something worth 1 billion, it's pricing in, let's say a 20% chance that they will find something worth $1 billion. Is that too optimistic? I don't know. Is Barrick after one thing worth $1 billion? I think they're after something worth more than $1 billion. 2 billion, in that case, they have a 10% chance priced in. So, I mean, theoretically, let's say there's a 20% chance that they will end up making a $2 billion discovery. In that case, this should be 100% higher, for fair value right now. And the thing is, nobody on planet Earth can know. But that's what the thing is. If we knew there was a 20% chance they'll find something worth 2 billion, then this would be cheap. There's 100% profit arbitrage to fair value right now. And that's with an 80% chance of failure. And then it gets even more complicated in the sense that there's an infinite amount of scenarios that could happen. They could find something 2 billion. I mean, it's not 2 billion or nothing. It could be 1 billion. It could be 200 million. It could be nothing. It could be 3 billion. You know what I mean? So it's like, that's why we should not need precision. We just, in my opinion, it's like aim big, miss big, still win kind of scenario. Or aim big, miss a lot, but the ones you actually do end up winning in, they're going to pay for the other ones. And that's why when you see people who are kind of bashing other because they don't have a 100% hit rate, they have no fucking clue what a high risk, high reward sector is. I have a bunch of juniors that's like, if 50% of my high risk, high reward juniors work out, then I'm gonna make a lot of money. If 30% work out, I'm probably gonna make quite a bit of money. Maybe if 20% work out, I'm gonna make quite a bit of money, assuming I capture the reward side, meaning that the ones that do end up working out, I'm not gonna hold. I mean, the only real thing I was gonna say is like here, for example, the gambler, high risk, high reward gambler portfolio. It's down -8. Okay. In 2 years, this was again assuming you don't do any trading at all. Headwater, a lot of results to report. I think it's cheap. Tectonic, all results left to be reported. I think it's, not too pricey. Inflection Resources, I think that's cheap. They, might be on to. They have smoke from, they might be in the vicinity of like 3 porphyries. No idea what size or if there are porphyries or what, how much they will be worth or anything. Brixton Metals still has BHP involved. They're not even in the same orbit as a BHP size price in terms of valuation. Fathom Nickel, they haven't even drilled Albert Lake yet. Goliath, I think they're going to keep on growing. Condor, we're going to know soon enough. They might hit something. They have Cobra Orco and Pucamayo. We'll know soon enough. Altamira has not even put out their news. Western Alaska, I think they're going to they have to do a private placement soon. I think that district is still wide open. Dynasty Gold, not too sure what happens there, but we know they've had some barn burners. Gold 79 probably also need to raise money, but I think their gold chain project, I like that a lot. There could be a couple million ounces there. It's just that they don't have any money to prove it really. Pacific Ridge, like I talked about, I think simply they're cheap. Juggernaut, they hit good at where was it? Was it Empire? Bingo. They actually got some good holes there. Midas was a letdown. Minus 36. I mean, they're relatively cheap, but that's one where it's like, okay, they release results from Midas, and so far I mean, there might be something there at Midas, but they did not hit it now at least. Reclam Metals, they're also looking for an intrusion related system. They hit some gold, but they haven't hit a bullseye yet. SK Mining also is like a huge potential. Waiting to see what comes out of there. Cartier Silver, I think they kinda went on pause when Allure kinda put the resource and the flush afterwards kind of put a damper on that. Ophir Gold retraced bigly with the lithium price and sentiment crushing. District Metals, I mean that's the thing. When was this? May 24. I would think that actually the junior sector is down from May, because that's the whole what's it called, tax loss silly season between May and now. Canadian Maverick, haven't done much. I'm down quite a bit on that. Alpha Exploration, they're raising money now. They have potentially a few discoveries down in Eritrea. I think it's Eritrea. Not getting too much love given it's in Africa and the sentiment is crap. Everyone is risk off, but still it's like, look how much red there is here. And it's like there's a few that are green, and most of these haven't even, I mean, put out the results yet. So it's like, I don't know, what if Headwater hits at Midas? What if Tectonic hits at flat? What if Inflection pierces a porphyry in the next 12 months? What if Brixton hits a bullseye up there in BC? What if Fathom Nickel hits something at, I mean, you don't need a lot of these to actually, I mean, -8. People could throw, just from this list alone, that's the thing with, the more companies you talk about, let's say the more diversified you are, given it's a higher risk, high reward sector, and especially now since we're just after a tax loss silly season in a bear market where most stocks are, the median stock is probably down 70% or more over the last 3 years. I mean, imagine how many, how much shit can get thrown my way just from this list alone. It's like, oh nice, his pick here -54 from $2, -35. I mean, you understand what I'm saying. There's like, if you, nothing is easier than throwing shit at people in this sector, because most will not work out. And the thing is, of course, if we were entered into a bull market tomorrow, we had a 2016 run, I would think every single one of these stocks would be green regardless of them putting out positive news or not. That's just how weird this sector is. You lose on most things in a bear market regardless of what they do, and in a bull market you'll win on everything. And the idea is that when we go from these depressed levels, if two of these make a significant discovery and we fast forward 1-2 years and we're in a bull market, I mean, these could be, some of those could be up 500-600% easy. That's just how weird this sector is. That's why you can't again put too much stock in like any single play. It's like, I think Headwater was a great buy at 38. That doesn't stop it from being down 39%. Just an example. So it's like, you can't take it personally. And I mean, most of the people you see that throws a lot of shit, for example, they're typically not very open with their own picks, if you know what I mean, if they even dare to play the sector, because it's so easy to, I mean, you can go to any bash or whatever. If they made a bullish comment on, on some stocks, I mean, they're, probably going to be down on a lot. It's like, I don't enjoy that, because I understand how high risk this sector is, and especially in bear markets where everybody's looking stupid, even though we're not stupid. Anyway, Hope you got something out of that. Consider me biased. I probably own shares of all companies I mentioned. Some are banner sponsors as well. Not investing advice, etc., etc. Yeah, but again, well, I would just end with the best teacher is a bear market. Absolutely. Then you get to learn about, well, you get to master, I mean, if you do the work, you get to see how this market acts in a bear market, in a shitty sentiment, which kinda is 70-80% of the time in this sector. So you can't, if you can't survive a bear market, and I mean, the thing is, if you're buying cheap, you're thriving in the future, but let's just call it surviving. If you can't do that, I mean, there's no way you're gonna make any money in this sector. If you can sell out during these bear markets, I mean, that's like majority of this sector is, is a bear market. That's just how it is. So if your ego can't handle looking stupid, if you can't handle fat paper losses for extended period of times, etc., it's gonna be hard. But if you can handle looking stupid for long periods of time, looking a lot stupid in some cases, and still do the rational decisions, I don't see how you end up not making money until the end of your days in this sector. And by that I don't mean, it's like, if we're in a bear market a year, it's like, should you be expecting to make a lot of money now? Not really. So that's also the thing. It's like, over a full cycle, yeah, you should be able to make money if you just bought low. But you have to see the full cycle through. You can't just, well, I gave it 2 years and we were in a bear market, so this sector doesn't work. No, it's the bull market that's supposed to pay for the bear market, etc. Because we're gonna make more money than we should in the bull market. Now we're losing more money than we should in the bear market. That's just how it is. That's how efficient these markets are. Yeah, thanks for listening. Bye.